Head and shoulders pattern in technical analysis is one of the most misunderstood, overtraded technical analysis patterns in all of trading. And I think people like it because it's simple. You just look at it and people can understand it and grasp it. So, for example, what the typical thing here real quick, if you're not familiar with it, is this one would be called an inverted head and shoulders. So that would be the left shoulder, that would be the head, and that would be the right shoulder. And the concept is simply that you get a lower low, and then you get a higher low. And then most people would say, alrighty, so now that we've got that, it shows a shift in the direction of the market, and we should go long. And that's where you'd go long. Okay, this is a horrible trade. Horrible, horrible, horrible trade. And it is one of the most, again, common patterns that's taught. And guess what? Almost by virtue of that alone, it's a bad setup. Doesn't mean that it never works. I'm not saying that. But it's just the old adage that once everybody knows something, then it stops working. And that is very true. And the reason that it's true, there's a logical reason behind that. It's because, well, trading is one of those things where most people don't make any money, as we know. And therefore, if you start doing what most people do, you'll start getting what most people get, which are losses. So once everybody knows something, even if it's a classical pattern, that classical pattern will stop working. And usually it's actually the best to do the opposite. In fact, I have courses where I actually teach people how to do the opposite, to look for classical patterns and then trade against them. And that's usually the right thing to do. And maybe you've even noticed this in your own trading where you think, gosh, if I were just to take the opposite of all my trades, I'd be a millionaire. Well, that is your subconscious mind actually picking up on these patterns, noticing patterns, and trying to communicate to you that that really is the truth. Now, the trouble is you don't know how to put that together in a logical manner and know why that's happening. And that's what I teach people. I show them, hey, here's why this pattern doesn't work anymore. Here's the logic behind it, the market logic with the bid-ask auction place. But until you get that knowledge, you can't do it comfortably. In fact, every chart pattern that is known like head and shoulders, double tops, wedges, triangles, none of these things really work in and of themselves. So there's two things we put together. And number one is the structure. I prefer to call it structure of charts. So this is where you have to do with your higher highs, your lower lows, in relation to moving averages, all of that sort of thing. And then the second thing you must put together is money flow. So we're looking for a shift of supply and demand ratio at certain levels. Now that's what really makes markets work. What makes markets change direction or continue in a direction is that shift of supply-demand ratio. It's got nothing to do with the price pattern itself. So we look at these price patterns. Now, if you get a traditional price pattern like this, and let's say that you get a shift of supply-demand, so demand comes in here, then, and there's not much supply, then yeah, this thing will crank up, but not just because of this pattern. Okay, in fact, let's see what happened here. So we get a reverse head and shoulders there, inverse head and shoulders, comes up a little bit, does make a higher high. Now, see again, everybody in their gerbil is going to start saying, yeah, here's another thing people talk about. Oh, higher high, higher low, higher high. That's supposed to be an uptrend. That is not the professional definition of an uptrend, by the way. Higher highs and higher lows is not the professional definition of an uptrend. So even that as price structure is not enough to trade with. We got to look, because that doesn't tell you anything about supply demand. Supply demand has to do with the number of shares, contracts, or lots going through. So this could just be pure retail trading, moving this up for brief periods of time. And again, it's not going to give you consistent results time after time over a large sample of data. Then it comes back down, whoops, we just broke that low. So see the chaos? And this is another thing that's important to understand, is that there is a cycle in the market called order chaos. People can make money. We can all make money if you know how to trade in orderly market cycles where everything aligns, looks good, and again, the money flow is obvious. Supply-demand imbalance is clear. But here we've got higher highs, and then we've got a higher low, and then whoops, a lower low. And so, well, that's basically an expanding triangle and a megaphone pattern, whatever you want to call it. Okay, and then down we go. So this inverse head and shoulders, no so bueno. Did not work so good. Let's go to another example, show you more of what I'm talking about. All right, so right now we have a higher high, and let's just take this a little further, bar by bar. We got a low, we've got another high, and we got a low. Okay, so here we could potentially have a regular head and shoulders where we could say, okay, that's the left shoulder, that's the head, and that's the right shoulder. And it looks pretty good. Now, one of the things that's important about when you have a real head and shoulders pattern, aside from the money flow part of it, is that we are in an extended trend. Head and shoulders are actually supposed to be reversal patterns. And so you can't even have a real professional head and shoulders until you have an extended trend. So here I've got my wave counting patterns, and 5 is average. So now is when we could start looking for a reversal. I've seen people, though, find head and shoulder patterns within the middle of a trend or even at the start of a trend. That's like, that just doesn't even make sense. That is not the definition of a head and shoulders because we haven't had an extended trend yet. Head and shoulders, again, is not just a higher high and a lower high. There's much more to it. It's got to be at the end of an extended trend. So as we continue on here with this, let's see what happened on this. So, okay, we did break down, and then, oops, we go back up, we go, whoops, down. Now we're going back down, up, holding that support level, and now we make new highs. Okay, and this is another problem with head and shoulders. Okay, and now we make higher highs. So one of the other challenges with head and shoulders or any type of trend reversal pattern is that trend reversal trades in general as a category are the best risk-reward ratio trades there are in the world. The best. They're also one of the worst win-loss ratio trades in the world. By the way, those two ratios have a bad correlation, win-loss ratio and risk-reward ratio. Unfortunately, we all want the best. We want high win-loss ratio, we want high risk-reward ratio. Those two do not meet on a consistent basis over a large sample of data. So this is why scalpers who accept a low risk-reward ratio get a lot of winners, very high win-loss ratio. That's primarily the way that I trade, trading especially, day trading. Now, and swing trading. If you're going to look for a high risk-reward ratio, most of the people that I know who trade trend reversals or even trend trades, where you get a very, very good risk-reward ratio, their win-loss ratio is usually less than 50-50. But they still make money because they know how to manage their money and get out of positions before that, the trend continues or the reversal stops. And that's what we've got here. So we never get into a real downtrend. Again, trend reversal means that the trend was going up and now it should go down. It doesn't go down. It goes sideways and then it continues an uptrend. So remember, just because we get a pattern like this or whatever other signal it might be, that the trend is about to end, it could end, but that doesn't necessarily mean it's going to reverse. In fact, most of the time, trend reversal setups, where the intention is to have a trend reversal, doesn't actually turn out that way. The trend ends, and then you consolidate for a while, and then it either continues up or you do get the reversal going down. The problem is, even if it does go down and you are right about the trend reversal, you gotta hang in there through a bunch of monkey business like this. And, again, how are you going to do this? It becomes very tough to manage psychologically. We get a higher high there. Would you put your stop here as we're going down? Well, if you did, you got stopped out. That's, by the way, that's not a coincidence. So these trend reversal patterns, any trend reversal pattern, can be very challenging to hold on to. So that's it for today. I want you to go get my rubber band trade, give it to you absolutely free. Start trading it, and like I say, it's a free trade setup I give you. Make money with it, and let's get you making money before you spend money. Rubberbandtrade.com. Check it out. My gift to you.